Hello, this is Sam Marakian. Today we are going to talk about loan forbearance. We've all heard about it since COVID-19 pandemic had hit the United States. What a loan forbearance is a bank-approved special agreement with a lender and a borrower to reduce payments or stop payments for a period of time to avoid foreclosure. What is important to know is that when you're in a forbearance, it is not a giveaway. You are not going to go ahead and have these payments forgiven. At some point, there will be a repayment schedule. It could come in the form of a lump sum payment at the end of the forbearance, or it could come in different ways. It could be a increase in your monthly payment, or if you're lucky, you could wind up in a situation where your bank allows you to put all those missed payments at the back of your mortgage. On July 21st, USA Today wrote an article that said 1 in 5 home loans are in default or are in forbearance. The U.S. government came up with the CARES Act, and what the CARES Act is the forbearance. It allows federally insured loans, VA, FHA, loans like that only, to go into forbearance. Conventional loans, it does not apply. It's a 6-month forbearance with the possibility of 6 more months of forbearance if you have not been able to get your job back or you've still been impacted by COVID-19. Once again, it only applies to federally backed loans. And there is going to be a repayment schedule even with the CARES Act and federally backed loans. When repayment comes, I call it the reckoning. It could come in many forms. I went over it earlier. It could come in the form of a lump sum payment. So let's say you had 180 days of no payments at $3,000 a month. That's 6 months. That could be $18,000. You might have to write a check back to your bank, or they might increase your payment by a couple $1,000s a month until you catch up, or you could put the payments at the end of your loan. However, that's really up to the loan servicer. It's really not up to you. It's up to them, and an agreement that you're going to have to come up with them. Either of the ways it happens, it is not a giveaway. You are not being forgiven these payments. You are going to have to make them one way or the other. Now let's talk about the economy for a moment. AP came up with an article today, July 30th, that 32.9% of the economy has retracted, meaning it's shrunk by 32.9% from the last quarter. Business investment and real estate investment has also declined by 27% in the last quarter. That's huge. The job market is the most important pillar of our economy and the best indicator of what's to come, and it's been severely damaged. As you know, we're at about 14% unemployment. And economists have noted, until we defeat COVID-19, we will not go ahead and recover completely. So we have our hands full for us. Let's talk a little bit about going ahead and getting into forbearance and what you should and shouldn't do. The first thing is, don't avoid it. If you have lost your job and you can't make your payments, you better call your bank immediately. Start gathering paperwork, proof that you've lost your job or your income's gone down, because your bank is going to ask for that. At the same time, you should call a realtor. You should find out what your house is worth, because if you have to sell your house, you want to be ready to do it. You're going to want to protect your equity and your credit. Simultaneously, you want to call a legal advisor and a financial advisor as well. The most important thing is, if you don't think you're going to be able to recover, protect your equity and protect your credit. Because if you wind up in a position that you're going to be foreclosed on or have to short sale your property, your credit is going to go. And if you do have equity in your property, you're going to lose that equity. Because if a bank is forced to foreclose, they're just worried about recovering their assets. They don't care what they sell the property for. So if you have equity in your property, let's say $100,000 that you could sell it for now, you're better off doing it yourself than letting a bank do it with a foreclosure, because you might have zero equity to very little equity by the time they're done with it. And at the same time, you're protecting your credit. So when you're able to buy again, you don't have to wait for years and years and years because a bank won't lend to you. Take advantage of the market now. Values have gone up because we have low inventory. Eventually, that's going to go away, especially when you have people that cannot go ahead and make their payments and they have to sell or they're foreclosed on. Inventory will go up and prices will go down inevitably. We've had a lot of stimulus from the U.S. government. That's going to come to an end as well. You already hear that the extra $600 a week federal unemployment is going away at the end of this month, today or tomorrow. Don't put your head in the sand. If you feel you're in this position, call a realtor. If you have any questions, you can call me anytime, 239-293-3799. If you need to sell your house, I'm here for you. If you need to sell your house in a different market, give me a call. I'm with Keller Williams Realty. I have huge amount of referral networks within our company. We're in just about every state. We're in 31 countries total. Give me a call, 239-293-3799, even if you just want to discuss this a little bit. This is Sam with Keller Williams Realty, Naples. Thank you.